Hey, what's up, everybody? It's your boy Isaiah Rubin, aka King Rube. I just wanted to pick up where I left off on my other video. I'm sorry I gotta break it up into segments. My videos can only last like 15 minutes, and then I gotta start another one. We were talking about investment screening and whatnot, and I wanted to make sure you understood this part. The industries, you cannot effectively screen stocks from different industries because the ratios will always be different and the percentages will always be different. As you can see, this is utility, natural gases, this is food industry, mechanical industry, and if you go back, I have to go back a page to different sectors and industries, and within it, you got aerospace, truck and tires, basic materials, business services, things like that. Again, the ratios are always different, so you don't want to mix them. For long-term investors, one thing to make note when you're personally making your own portfolio or building your own portfolio, you want to make a well-rounded portfolio. You want to get, at least 3 or 4 from each industry, to make it well-rounded. That way, if one sector has it bad, it's not your entire portfolio. You have other sectors that hold it up, so it doesn't look that bad and drag on your overall portfolio investments and things like that. So you want to make it well-rounded and get some from each industry. Again, I'm going to keep pushing this because it's so important. You need a notebook to get. You're looking at on this, these results. You're looking at 680 different stocks you have to compare, and just all you need is the ticker. The ticker is just the symbol, the stock symbol and things like that. Just write them all down, the ones you're interested in that are in your price range, that meet your specifications of performance, debt to equity ratio, dividend. Some people want that dividend, especially long-term investments. You want to get that good dividend, so you get that extra money coming in, as well as growth with your stock prices, going up year after year and quarter after quarter. You want that growth. Once you compile that list, what you want to do is create a watch list. And again, on any online brokerage, go to research, go to find investments, drop down and go to my watch list. I have, I believe, at least 5. Oh, they're making me sign back in. Okay. Yeah, be kidding me. Right. So, the watch list. The watch list are stocks or a list of stocks that you've compiled to basically watch. I stock stocks. I watch them like hell, and you kind of have to over a period of time. As you can see, I've been watching some of these stocks for at least past 2 months. This particular watch list, just stocks I day trade on the regular. I compiled a list of stocks that met my specifications, and I believe I'm ready to buy as soon as possible. And again, I know they show, they're going down. The stock market today had a bad day. As you can see, I pulled up the indexes at the bottom. Dow's down 60, NASDAQ, S&P, the whole stock market is down. Like I mentioned before, just because the stock market down doesn't mean all stocks are down. This goes with beta. Again, beta is the vitality of the stock. More than one means it moves with the stock market. Less than one means it doesn't. And it, holds its own. Like as you can see, HPE, kind of held its own. It didn't go down with the stock market like that. But AngelList getting bad ratings. As I said before, the ratings here, and the only reason why they're going down is because AngelList got an offer to be bought out. They refused. So analysts are saying to sell. Again, you want to watch the analyst ratings, see what the consensus is on the stocks, see what people are thinking. This one's about, currently, if you look at the top rows, averages, this had not a strong buy, but a buy. 3 would be a hold, 4 would be a soft sell, and 5 would be a strong sell, as you can see. When you compile your watch list, they'll have good information. Here, what they don't show you during the stock screening, the investment screening, is the returns over the years. So you want to watch these. You want to make sure these are consistent. You could take this out a year. I think the furthest back you can go is 10 years, and they haven't had this for 10 years. So this one's taking a dump here. I don't even know why I have this on my watch list. It's crappy. I'll just remove it. Not sure how that one made it. But this is basically the gist of it. You create an account, whatever online broker you want. Make sure you have your book to take notes and to write everything down. Go to investment screener, screen out, all the stocks. Once you have understood and understand the ratios like debt to equity, return on investment, return on equity and things like that, to understand what kind of, what you're willing to risk. And there's another tool that Capital One has, and it's basically like a trying to find it. Basically, it's a test. It's a test with a couple of questions that basically shows what type of investor you are, whether you're balanced, whether you're aggressive. Investors, are willing to take more risk. Balance, growth, steady. There was another one that was basically like, you just want income. You don't want too much risk. You're willing to pay for what I call lazy stocks, and things like that. But again, going back to my point, go to investment screener, screen out the stocks that you want to watch or track, create a watch list, which is basically what you do is once you have the symbol, you'll type it in, click on it, go to add, they'll add it to the list. It'll tell you, and this is specifically, I guess, for Capital One investing. I'm not sure how the rest of them work. They pretty much work the same, but it might be slightly different. Basically shows you how long you've been watching it and things like that, and you know, whether it increase or decrease, how, you know, for how long you watched it or by how much. One thing I do want to show you guys about most of the stocks, if I can find one that's been around for a while. Series, what this stock is what I call a boring stock again. Every stock around this time, you know, every stock that you look at right now would basically look somewhat like this, beginning either between 2007 or beginning at 2009. They basically all went down around 2009. So if you see something like that, pulling something out at the 10-year mark, don't be alarmed. You know, that's when we had that crisis, and everything's pretty much trying to correct itself and get back together. As you can see, that's what I've mentioned about boring stocks. You know, it was basically a penny stock at, you know, at the bottom of it, and it slowly, steadily went back up. Nothing fast. You know, it shows a nice steady line, trying to get up, but it's hitting resistance at least $4.10. I'll get into technical analysis where you learn things like divergences and support and resistance and some of the Greeks and things like that. But this is another video I just wanted to point out about the not comparing of the same industries, because you'll get mixed reviews and data, and you might, you know, confuse yourself. And once you compile that list of the stocks you want to look at, you create a watch list and you watch them. You know, you put them over here and you see how they've been doing from, you know, from the starting time. Some of these is just, and again, just because it's going down now doesn't mean it's terrible. Again, stocks have bad days, bad weeks, bad months. That's about it for this video. Again, if you want to like, subscribe, tell anybody that you want to show this video, especially to my brothers and sisters in the African American community that are interested in stocks and things like that. Subscribe to the page. Subscribe to my YouTube channel, excuse me, which is King Rube. I'll be dropping a lot more videos, some about stocks, some not about stocks, some about my business. For those of you who don't know, I started a clothing line called Urban Awareness, which has a Facebook page if you want to add yourself to that. That's about it. I'll see you guys. Peace.